list of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, October 28th. I'm, of course, joined by my wonderful co-host, Jordan Youl with StoneCastle Investment Management. Yet another week that we get your presence, Jordan. Thank you for joining us.
Yeah, thanks for having me. It's good to be back.
It is good to be back. So we're going to touch on a few things because we missed last week, unfortunately, but we're going to touch on some stuff that came out that affected what happened this week. We're going to get into CPI and the Bank of Canada rate hike. CPI last week in the US, data that came out, and bank rate hike that happened this week in Canada. We're going to talk about small caps and some new relative highs. Very exciting. We're going to talk about the cannabis sector, lots to break down there. And then, of course, we're going to get into some CSE issuer news. So just to remind everyone on our first topic, CPI is the Consumer Price Index. It is the most popular measure of inflation, and that's something that we pay a lot of attention to in the markets. And then, of course, that data came out last week, and this week we had a rate hike in Canada. So what happened?
Yeah, going back to last week, the market and investors were really focused on the CPI number in Canada. And what was really interesting was it came in less than expected, 6.9. I do have a chart showing the rate of change in the CPI number. It is off its high of 8.1% that we saw in June. So the rate of change is coming down. So the equity markets reacted very positive with this announcement and this release, which is fantastic. We've noticed that energy and gasoline prices have come down, as referenced on the chart on the right-hand side. Those price levels are well off their most recent peak. What remains, stubbornly high is food inflation. It hit a 4-decade or 41-year high. That needs to come down. It's not really reflected in the grocery stores yet. That still remains a concern, as well as shelter or housing, but it's moving in the right direction nonetheless. So the Canadian markets reacted very positive to that print, as well as the US markets. So we finished last week on a very high note. And I think that really carried forward into this week with the Bank of Canada coming out with their interest rate. The market was anticipating 75 basis points, but they came in at 50 basis points. So the takeaway here is that if inflation is coming down, we're cognizant of the fact that the markets or the Fed will continue to hike, but they might not be as aggressive. So we may see 25 to 50 basis point hikes moving forward, but not the 75s or the 100s. The FOMC is scheduled next Wednesday, November 2nd, and the market is expecting a 75 basis point hike next week, but they could match Canada and come down at 50 basis points. We'll wait and see, but that's what really the market's anticipating, and that's really translated into the really strong performance this week in the equity markets.
And just to remind our viewers, because we talked about this a few weeks ago, when that CPI data came out, it was, if you saw on that graph, it was 8.1, and now it's gone down to 6. Mm-hmm. And the interest rate hikes are to bring that number down. So this is very good for us because the number is coming down. It's doing what it's supposed to do when they increase rates. So hopefully, if all goes well, Jordan, they will slow down the interest rate hike. Bank of Canada has done 6 rate hikes this year, which is fairly unprecedented. So hopefully that slows down. And the flip side of these rate hikes going up is that what it does do is it staves off inflation, but also as borrowers out there, when we have credit cards and loans and mortgages, it affects us in that regard as well. Maybe it brings down the price of gas, but paying your lease might go up. So we want to get through this pain and suffering as quickly as possible, right?
Yeah, absolutely. So it's moving in the right direction. It's going to take some time for the data to trickle down. But like I mentioned, there are components within that CPI index that remain elevated. So we like to see that come down.
Absolutely. Okay. Small caps, we are reaching new relative highs. What is going on there?
Yeah, so we've talked about this over the last several weeks. This is really exciting. What has been a concern for the last 18 months or so has been a lack of market breadth. So, in other words, the number of companies rising or participating in the equity markets was quite narrow and slim. So, I do have a chart showing a ratio of the Russell 2000 ETF compared to the large cap issuers or stocks within the S&P 500, and you can see that this ratio peaked in February of 2021, and it has declined about 28-29% off that peak on a comparative basis to large caps. And as investors, we want the small caps to participate. So despite the markets hitting all-time highs in January, not all stocks were joining the party, right? It was predominantly larger cap defensive with a value tilt that was really leading the markets, but the small to mid cap growth area of the market really struggled and underperformed. If you look on the right-hand side of this chart, what is fascinating and really interesting is that this relative relationship just hit a new high for this year, favoring small caps. So what that is telling us is that internally within these indices, we're seeing more stocks participate, and we're starting to see more accumulation, buying power in the small to mid caps, which have been really out of favor for the last 18 months. So again, this is a positive signal for equity investors moving forward. As we continue to trend higher, we want a majority of the stocks to participate. We want market breadth to be robust. That's what we're seeing right now, but that hasn't been the case for the last 18 months. So that's very constructive. Furthermore, at the bottom chart panel of this chart is the percentage of cash on the sidelines. So this is a sentiment indicator that we like to track. It's the Ridex money flow. And you can see how elevated this histogram was a few weeks ago, indicating that there was a tremendous amount of cash sitting on the sidelines. At some point, that cash needs to be deployed and put back into the market. And we've been seeing that over the last couple of weeks. And it's not indicated in this chart, but it was at levels similar to what we experienced during the COVID lows in March of 2020. So from a contrarian standpoint, this is very constructive and positive for the equity markets as we head into a very strong seasonal period for the equity markets.
Well, and just to point out that cash, if that cash flow is going back into the markets, that's just good for the markets in general, wherever it goes, because capital flowing in will create support levels and liquidity and do well for the markets, right?
Yeah, absolutely. And we've really noticed that, like, when we spoke several weeks ago, we were starting to see some subtle signs of improvement in, some beaten down sectors like cannabis, which we'll touch on momentarily. But really, if you take a look at what's performed year to date, it's been predominantly energy, right? It's been pretty narrow, slim pickings, right? With a tilt towards large cap. That's not really the case right now. We're seeing improvement in discretionary, cannabis, industrials as well, which is fantastic. So we want the market to be led by multiple industry groups and sectors, as opposed to attempting to hit new all-time highs or regain those all-time highs only being led by one or two sectors. Like, that's not really constructive or positive. So we're beneath the surface, we're seeing a lot of positive changes right now that we haven't seen in multiple quarters now.
I love it. That's great news, Jordan. Okay, let's talk about cannabis. So what's going on in the cannabis space? It's been fairly active. I know that there was a little slump in there. Well, not a little slump. What would you say? 12 to 18 months, bit of a slump?
Yeah, absolutely. That was
Not
really
terribly little.
yeah, no, it's the fatigue is definitely set. And I think, from a contrarian standpoint, that's probably indicating that maybe the low is in, but it's been about 24 months now of drawdown in the cannabis space. The MSOs, the multi-state operators in the US, from a fundamental perspective, have been pretty fantastic, and the valuations today are a lot more attractive than they were 6 months ago, 1 year ago. So there's value there, but it's just a function of, having patience and willing to stomach the volatility, because it is a higher torque or higher beta sector that's growing and emerging, and it's out of favor along with like the small caps, like we've seen over the last 18 months. But we're starting to see that shift beneath the surface, and we're starting to see that buying power and accumulation back into the cannabis sector that we haven't seen in a long time. And when we're tracking different ETFs and sectors and industry groups in terms of like what's performing, what's doing really well, cannabis is one of the top performers right now. Energy, oil and services, and there's other areas that have consistently done well year to date, but cannabis has been one of the biggest movers from a positive rate of change perspective. So that has us really excited. So we've been increasing our exposure to a lot of these CSE issuers, the MSOs predominantly, to increase the beta of our portfolio to capitalize on this new trend that's starting to emerge.
That's great news. I love it. All right, we're going to jump into some CSE issuer news. This is a sector, I think it's been a little while since we've talked about this sector, so I was pretty excited to see this transaction happen. This is SOLV BL Solutions Inc. And they just announced the closing of an acquisition of Dark Horse Films Limited. Congratulations to them, by the way. This is a big acquisition that they've completed. The valuation of this acquisition was $10,150,000. So I found it intriguing because we haven't talked about the blockchain sector in a while. That we're seeing some of these big transactions still happen. To me, that's encouraging, wouldn't you say?
Yes, absolutely. It was a couple of years ago where there was a little bit more demand and appetite for this segment of the market. It's been a little bit quiet, but I really think that's just a function of, the market environment we're in right now, and investor sentiment being, up until recently, was pretty pessimistic and negative. So, again, if we get some follow through with some of these trends that we're seeing, then yeah, I think we'll see more of this for sure. And we'll see more financings in this particular industry group. For sure.
Absolutely. So just to touch on SOLV BL Solutions, they're an innovative cybersecurity company that provides immutable data authentication using advanced cryptography on a SaaS-based model. This is a new sector to me, so I'm learning about it as I go. And Dark Horse is a blockchain-powered business-to-business and direct-to-consumer movie digital content studio. So these are kind of neat transactions when you see them happen. I'm excited for them, and congratulations. Jordan, what should we think about going into next week?
Yeah, I think next week all eyes are going to be on the Fed. The FOMC are going to come out on Wednesday, November 2nd. And as I mentioned at the top of the call, the market is anticipating a 75 basis point rate hike. But again, there is a higher probability now that they might only increase 50 basis points. So we'll see. We're going to a strong seasonal period as well. And then in a couple weeks out from now, November 8th, is the US midterm elections, right? So I think that'll be quite interesting. But at the end of the day, we're going into month end. We're going to see some rebalancing. The Dow Jones is on track for having the strongest monthly gain that we haven't seen since January of 1987. Wow. So, there's a lot of catalysts out there. There's, improvement in market breadth. We're seeing a lot more opportunities in the markets. Our shopping list continues to grow every day. So as an investor, I think it could be a timely opportunity to chip away here and put some cash to work. So.
That's amazing. I love this. This was a great market recap today. Good news coming from Jordan. Listen, Jordan, thank you so much for joining me, and I hope you have a wonderful weekend.
Same to you. Thanks for having me.